So this is a revision video for C.1 and it's part 2, the revision for this. As with all the previous videos, I'm going to talk reasonably quickly. Make sure that you're making notes on the topic areas which are important, and also make sure that you then use the textbook and also other videos on YouTube to really think about the material that's in this video. Make sure that you are really thinking about stuff. It's when you're finding stuff hard, reading around the topic, that you will learn the most, not just sitting here listening to the video. You need to be doing something with the information that's contained in the video. This is a quick look at what you need to learn for topic C.1, and it is thinking about the balance the financial position or balance sheet. So we need to be looking at the purpose of it, understanding how it's laid out, and understanding what's in the balance sheet predominantly. So if we just crack on, these are 3 extracts from the exam. What you'll notice between these 3 examples is that every year the exam uses similar headings and similar sorters. So if we look here, current assets, inventory, trade receivables and bank. Current assets, trade receivables, cash and inventory. So pretty similar, except they use cash rather than bank. Another year, current assets, trade receivables, cash, inventory. So a question might come up in the exam which said, give me some examples of current assets. So make sure that you know that we're thinking about inventory, which is stock, trade receivables, which is your debtors, and also cash in the bank. So you might want them as some examples, so you could make some notes. And again, the liabilities, if we have a quick look, it's got trade payables, overdraft. Doesn't have overdraft on this one, but the current liabilities are pretty similar each year. So these are just the ways that it might come up in the exam, but you'll see that the layout's pretty similar each time. For the rest of the video, I'll just use one of the layouts. In this exam, there was some questions with regards to filling in some of these blanks, and that's one of the things that you need to be able to do. In the other 2 exams, it was the 8-mark question, so it was asking you to comment on the document. Again, these look really complicated, lots of numbers, but it's not something to be really frightened of. So if we just look at this one with the 1 column, okay. So this is your statement of financial position, also known as your balance sheet. And if we have a quick look here, first thing we need to think about is what are fixed assets. So fixed assets are your buildings, your computers and your other equipment. So the things that you are not intending to sell. So an asset is something that a business owns. It's a positive thing for a business to have assets. But fixed assets are things that you cannot sell without stopping becoming a business. So I know that in the lesson I used the example of our school. We can't sell the desks, we can't sell the computers, we can't sell the building itself, otherwise we're just not a school anymore. And for most businesses, they cannot sell their fixed assets. Now that's not to say that they won't over time. So an example, I think again I used in lesson, was that Tesco's has just sold £250 million worth of land. Now that is a fixed asset. It owned all this land which it was going to build supermarkets on, decided not to. It was a fixed asset, but it decided to sell it, and it managed to raise 250 million quid from the sales. So fixed assets are things you probably don't intend to sell, but some fixed assets you might be able to sell if you really wanted to. Current assets. So our current assets are things which can quickly be turned into cash, normally within a 12-month window. So debtors, people who owe you money. So maybe pause this video and write that down as a note. The debtors are people who owe your business money. And that's why they're considered assets. So if I'm going to get money off someone within the next 12 months, they are my debtor, they owe me money, and therefore I consider that, even before they've given me it, I consider that to be an asset of my business, money that I'm going to be paid in the next 12 months. Cash is obviously an asset to the business. It's money that you've got and you can do anything that you require with that quickly. And this inventory, so stock, you intend to sell your stock. It's so, and therefore you're going to turn your stock, so that it might be a part finished item or it might be a finished item, but you expect to turn that into money within the next 12 months. Therefore that's considered to be one of your current assets. Okay, so there's a big difference there between our fixed assets and our current assets. Then we need to think about our current liabilities. So these are bills that we need to pay within the next 12 months. So again, we've got trade payables, so creditors. These are money, people that you owe money to. Debtors, people who owe you money. Creditors, people you owe money to. Another current liability would be something like an overdraft. An overdraft is money that you owe the bank, pardon me, and it's usually expected that it's not a long-term source of finance, and so you'll be expected to pay that back probably within a 12-month period. Now, if you can get yourself to this part here, net current liabilities, sometimes known as working capital too, have a quick pause and try and work out how that figure has been calculated. Okay, hopefully you were able to work it out. It is our current assets added together. So in this case, we've got £8,500 worth of current assets. So money that we expect to receive in 12 months. This, the current liabilities, adds up to 10,200. That's money we're going to have to spend within the next 12 months. So 8,500 take away 10,200 leaves our net current liabilities, or our working capital. Now this first part is probably the most important part to be able to pick up at least some marks if the question comes up in the exam. So your working capital, in this case it's a minus number, and again I'll do a video on the 8-mark questions, but minus numbers are always not going to be good news in any sort of finance for business. So this minus 1,700 says in the next 12 months you're only going to get £8,500 in, but you've got to spend £10,200. You're going to have a problem. If your working capital is a negative number, it means you are unlikely potentially to be able to pay some of your bills over the next 12 months. And so when it comes to looking at that in an exam, you'd need to think, well, how could you fix that problem? So if we just have a quick look at that now, if you want to pause the video, how could you solve that problem? How could you make that minus number into a positive number? So hopefully you're able to maybe identify again that there's two ways that you can try and fix this. Increase the assets, those current assets, or you can decrease those current liabilities. And that's probably the more realistic way. Can you try and reduce those current liabilities for the business, and that would change that number around. If we look at our total assets, so have a think about how that total assets figure has just been worked out. It is our fixed assets up here minus our net current liabilities, or working capital. Okay, so the buildings, the computers, etc., the equipment of our business are worth 14,600. And if we take away these current liabilities, then we're left with this 12,900 figure here. And then the bottom half is this, well, how is the business financed? In this case, we've got capital, i.e. money that the owners have put in, and we've got profit left over from a previous year, and that equals 12,900. And this is where it's called a balance sheet, is because these total assets figure and the total capital figure have to equal each other in order for it to be a balance sheet. So I've sort of touched on a few of them. There are a few things that your business can do. Sell fixed assets. So I said earlier on you're unlikely to do that, but as Tesco's have done that in some financial difficulties, one of the ways to solve that is to sell some fixed assets. If you've got something that you can sell which won't affect your ability of your business to generate revenue or income, then do it. You could increase the current assets for the business. So one of the ways that we can increase the current assets is to say, well, hang on, let's try and get this trade receivables or debtors up. Can we sell more products? That's the way that you'll really be able to increase those current assets. Could we reduce the current liabilities? So in terms of the current liabilities, what could we try and reduce? Maybe we could get some of the owners to put some money in to pay this overdraft off. Do we really need to buy that much stuff? So maybe this is stock that we're buying. Maybe this is advertising that we're buying. Whatever it is that we owe money for, did we really need to spend it? Could we reduce that? And then finally, and sort of just alluded to it then, could we get some extra money from our owners somewhere? Could our owners put some more money into this business? That could hopefully solve the financial position of this business. So again, check the video out on 8 markers. Just to recap here, we've got do you know is the big part of this. Do you know what the elements of a statement of financial position or a balance sheet are? That's the big thing for this exam. So again, go back, have another little look at this video and really think about how some of those numbers were worked out and what you could do to potentially solve them.